Good morning and welcome to the Business News, brought to you by Blytheway. I'm Charlie Gibson, and today we are talking to the Managing Director of European Metal Holdings, Keith Coughlan, all the way from sunny Perth. Keith, very good, good morning, good afternoon to you. Thank you very much indeed for joining us. First and most important question, make us feel better. What's the weather like in Perth?
Well, to be honest, Charlie, I think it's probably better in London at the moment. It's a little cool. I won't call it cold because you'll laugh at me for calling it cold. But I think London would be sunnier and warmer today.
Well, I hope. All I can say is I hope you're wrong. But listen, I often say the clue is in the name when we talk to mining companies, and European Metal Holdings seems to, give quite a lot of it away. But why don't you tell us about your lead project, which is Synovitz, isn't it, which is lithium?
That's correct. So Synovitz is a historic tin mine in the Czech Republic, in the north of the country, on the border with Germany. And tin has been mined on and off for about 600 years in this part of the world. So there's a very long history of mining. The most recent mining finished when the wall came down in 1989. The tin price was considerably lower than it is now, and it was sub-economic. There's always obviously been a very solid, very large lithium endowment there, but clearly in those days not very much was known about lithium. And as we've seen the metal become more and more important globally with the advent of the battery industry and the electric vehicle industry, the project has come into a new sense of importance.
So is this a tin project when all is said and done, or is this a lithium project?
Well, it's a lithium project with very healthy tin credits. It wouldn't be standalone economic with the current tin price as it is, but they are very handy credits for us. And one of the great benefits of that is that the tin and the tungsten come out of the ore with the first stage of processing. So there's no concerns about whether one has to favour the lithium or the tin. We can happily produce both without any negative impact on the other.
And you've done a study, a pre-feasibility study?
We have, Charlie. In fact, we've done two pre-feasibility studies. The original one was approximately 2 years ago, based on the production of battery-grade lithium carbonate. And we've updated that study over the course of the last few months with a view to producing battery-grade lithium hydroxide. And the reason we did that is that is emerging as being the end product of choice for most of the off-takers who we've been talking to, or the potential off-takers that we've been talking to. Lithium hydroxide seems to be becoming more and more important over lithium carbonate for various reasons, battery chemistry reasons, and we felt it was important to demonstrate our ability to produce both products. Plus, we've done a fair bit of work on the optimization of the flow sheet, the reagent mix, and these sorts of things, and enhance the project in other ways. And we wanted to demonstrate how that looked and what the final result was to the project. And happily, they've all had positive outcomes.
So are we looking at an underground hard rock lithium mine?
We are. It'll be a bulk underground mine. As I say, it was historically an underground mine. The mineralisation is very consistent throughout the entire ore body. It's a very, very large ore body. Mining it underground is really, I think, the only option, given where it sits and the social and environmental considerations in Europe. So yes, bulk underground mine, about 1.68, 1.7 million tonnes per annum of throughput, giving us, as the study says, between 22 and 25,000 tonnes per annum of end product, depending on what the mix is between hydroxide and carbonate.
And this is a pretty sizable mine, pretty sizable underground mine. What has that meant for your costs?
Well, it is a sizable underground mine. It's a very sizable deposit. It is the largest resource of lithium in Europe. In fact, it's by far the largest resource of lithium in the EU, which is an important distinction. But from a cost point of view, as the study demonstrates, it indicates that we can be a producer of either hydroxide or carbonate in the bottom end of the global cost scale. And that's for a few reasons. Firstly, the nature of the ore body, the consistency of it. The tin credits are helpful with regards to getting our lithium costs down too. And we get very, very good recoveries from the ore, both right at the front end, but also through the plant itself.
I presume that you're almost in the heart of those consumers in Europe that would be interested in off-taking lithium hydroxide in this case for the purposes of batteries. And of course what I'm talking about is the auto industry, particularly in Germany. You talked about being in the bottom quartile. Did I get that correctly of the cost curve?
Bottom half. We may end in the bottom quartile, but certainly bottom half.
And what about Capex?
Yeah, Capex is about 480 million US dollars. That's to go to hydroxide. It's less if we only produce carbonate, but the IRR is better on the hydroxide story. Now that's not a small amount of money, but as you rightly point out, we are surrounded by potential end users and potentially very large end users. Within 500 miles of the project, there's about 7 million vehicles made every year. And every year more and more of those vehicles are being made electric. And all of the large European car manufacturers have announced very ambitious plans for the numbers of electric vehicles that they're going to produce in the foreseeable future. And what that's done is it's not only potentially then those companies that might be off takers, but that's brought a whole raft of global battery manufacturers to the area as well. The Koreans in particular are very, very strong in Eastern Europe. Also the Chinese moving into the area, and the development of a European battery industry with a great deal of support from the EU and also from the German government. So if you look at the size of these companies, the size of their ambitions in the electric vehicle industry, and you work out how much lithium they're going to need if they're to hit those targets, I think that sort of Capex is very doable because I believe it will be supported by those end users.
So are we talking 50-50 debt equity, do you think, or are we looking for offtake financing, or how do you see yourself financing this?
Look, I think it'll be more like 60-40 debt equity. I think there's money available from sources such as export credit, EU sources for part of the debt component. The numbers that potential financiers have been talking about, or the ratios, are in the 60-40 realm.
And the NPV of the project is?
Just over 1.1 billion US.
And Capex for that NPV? 480
million US.
All right. So, and your market cap at the moment?
In your currency, about 32 million pounds.
So that would be about $40 million. So I'm just trying to work out what percentage of NPV or that investors are being asked to pay in order to have exposure to the project. And I mean, it's 5% or that sort of order of magnitude, isn't it?
It's not high. You're right. It's not high. And also, if you were to look at the project, value the project on a per ton of resource basis, it's also very, very low.
So if you look at, which is, I presume, a function of the fact it's a very large resource, as you pointed out earlier on. But if I were to ask you this, then how do you see the project going forward? What are the timelines you need to hit, or the milestones you need to hit, and within what timelines? And if I put it this way, in your wildest dreams, where would you like to be in 2-3 years' time?
Well, in 2 years' time, we'd like to be well into construction. In 3 years' time, we'd like to be into production. But the timeline looks like an update now, going to definitive feasibility study with a view to being bankable by the end of first quarter to second quarter next year. So that's calendar 2020. Fund the project. We anticipate a construction period of about 2 years. And then really the timeline from there will come down to final permitting and all those sort of factors before we could say when we'll be in production.
Keith, we wish you the very best of luck. Come back and let us know how it's going on and when you're hitting those milestones and how that takes you to the conclusion. I say the conclusion, the getting into construction of the project. Ladies and gentlemen, that was the Managing Director of European Metals Holdings, Keith Coughlan there, talking about their project Synovitz in the Czech Republic. I'm afraid that's all we've got time for, but join me, Charlie Gibson. We'll be back soon with the business news for Blythe Way, bringing you more such investment opportunities. And until then, you have a very capital day.